JB here, JB here. Hope everybody's doing outstanding. Monday, August 4th, 9:05 a.m. For a quick morning. We're gonna talk quick about the market. Some names I'm looking at go from their S&P in the green, bouncing off of I won't even call it the carnage last week, but obviously a rough end to the week. S&P closed the week down 2%, small caps off over 4%. Rough stuff, right? And so now the argument is this the start of a major pull, or was this just profit taking after the massive run from April? This week we'll probably go a little ways in determining that. There's not much in the way of catalysts. A big week for earnings. You still have the names of AMD, likes of AMD, Palantir reports after the close, Uber, Shopify, TTD reports, LLY reports. So lots of companies reporting too. 13, I think it's 1,300 plus companies reporting earnings. So that'll kind of be the backdrop. We already had the Mag 7 outside of the NVIDIA report. It's fun. Well, starting with Google, it's like Google reported a great report, and that stock kind of struggled. Then this past week, you saw Amazon and Apple report great earnings, and if you had to script a little bit on what Apple would have to report for a positive move from the stock, I think that's what they did last week, and the stock still sold off. So I don't know. Again, maybe it's profit taking, some churn, or is this the start of a bigger move? We'll find out this week. Obviously, the catalyst last week at the Fed meeting, and Powell kind of remained steadfast, almost somewhat hawkish. Then you had PCE data, a tad hotter than expectations, and then Friday was the doozy, right? The jobs report, which at first glance didn't look so bad. I think most folks were at least expecting a little miss, right? But then it was the backward revisions, a couple 100,000 with 284,000 jobs revised from the previous 2 months. And normally that's not that big a deal, but in the midst of the tariff headlines, it becomes this talking point for how tariffs are impacting the jobs and the economy, right? That's all it was about. Oh my gosh. And then to put fuel to the fires, you have POTUS coming out saying they're firing the chief of the Bureau of Labor Statistics, right? Which, I mean, that's what you want to do. That's what you do, right? But saying that the numbers are rigged, it's all political, whatever it is. I'm not here to argue that stuff. I'm just trying to look at it with an open view of what's going on, right? And to me, I mean, it's just like, who remembers? It seems like eons ago you had the review, right? Every year there's an annual review of the jobs numbers. I forget exactly the wording. I put it in the watch list, but last year it was revised down 800,000 jobs for the year, right? So if you do the average of 70,000 jobs a month that were revised lower on the jobs report, right? And that was ahead of the election. So if you're going to make the argument around the political side of it, you could say, wow. So then similar to this year, last year at the same time, there were backward revisions to the previous months outside of that benchmark review. So I'm not here to make the arguments. To me, that if you look at it as like a broader view, you could say, wow, if you didn't know that the tariff situation was going on, you could say, well, this is normal. This is commonplace, right? The revisions, going back to I think it's 2003, the average backward revision is 50,000 jobs per month, right? And whether that's up or down, that's obviously it's been down most recently. So we were 70, 100. So a little more, obviously it's substantially more than normal, but if you take that over a 12-month period, it's not an anomaly, right? It's almost somewhat normal. The issue is, why do we have these revision numbers? Why are they so big? Why is that data not accurate, right? But we've been living in this world for a while. So maybe that, if you change the system, come with something more accurate. I don't know what the answer is, but to me, I'm not saying to dismiss it. I'm not saying don't worry. This is just dust under the dust the crumbs under the carpet, and it's going to go away. I mean, obviously, all these data points you got to kind of pay attention to, but to me, it's like you can make the case that okay, this has happened before. It is a surprise, but the surprise last year, I mean, you would have thought the markets would be tumbling after 800,000 or nearly $1 million jobs revised down for the whole year, and then the market just went on and did its thing. So we'll find out. The issue here is the big lag between the Fed meetings, and now you have the probabilities of the Fed cutting rates going up to like 80% in September. At times it was 50%. Now you have the probability of 4 rate cuts going up by the end of the year in December. And then you couple that and add that all together with a Fed governor leaving, entering her resignation, which was going to come at the end of the year anyway. Now she was a voter, so there was already 2 dissenters at the last meeting. Anyway, hopefully if this does anything, the rates come down a little bit, the economy remains strong, and the markets kind of go on their way. If not, I'm still open to both sides of the spectrum, right? And last week at this time actually was Tuesday. I was getting a little more bearish on the market just because of the action, right? We saw gaps. The market couldn't find footing, and then it just melted for the rest of the day in very tight ranges. It was very tight ranges Monday and Tuesday. And then once the Fed meeting came, those ranges became larger and to the downside. Hopefully, we don't get that. Also of note, great chart here on Market Watch. I don't know if I posted it, but here's rate cut cycles, right? So if we get back into a rate cut cycle, you can see the S&P typically goes up. So hey, we'll see what happens. New range this week. 618 was a spot we had back on the way up, and my annotations, yeah, it came right down to it back into the in June. 618 to 636. So we'll see what happens here. If we get a red to green, a green to red open, so if we reverse the gap today, 622 maybe, 621.50, I might look for some hedge puts. The difference between a Monday and a Wednesday, Thursday, Friday is the premiums are a heck of a lot more expensive to do the hedge puts, but possibly SQQ calls. I'm not saying there isn't a possibility here for downside, but I wouldn't be surprised if we chop around and then maybe find some footing and markets rally. So yeah, earnings, catalyst. There's some data this week, but outside of that, it's the August 7th tariff date on Thursday. Who knows? I'm sure Canada is going to come up with some kind of agreement with the U.S., and then we can move on from tariffs and move on to something else, right? All right, so that's kind of overall marks. Take a look at that weekly candle on the SPY. You put in perspective of April. I mean, the thing is with the April 7th Liberation Day, and that April 7th lows and Liberation Day, you look at those candles, the sell-off really started at the end of February and March, right? So that's kind of where things start to pull. And those candles on the weekly, I mean, that's what I'd be watching. If we have another 2-3% weekly down week this week, maybe that sets things up, right? And then, of course, I always try and look through a glass half full scenario. Yields yields dipped, hit multi-month lows. So if that trend continues, I think that just bodes well for at least for smaller cap names, right? Which took it on the chin last week, one of these weeks, right? All right, so now just quick on individual names. I mean, JOBY's the one. JOBY reports earnings after the close Wednesday. Just announced they acquired Blade's passenger division, right? So Blade has terminals and does transportation per seat. I think they do helicopters, they do organ transport, things like that. But they already have facilities and terminals set up. So it kind of like helps expedite the scaling out of JOBY once they get the permits and things like that. It's a company I think it was a SPAC transaction, $300 million company. It's still going to trade. I think there's just their medical division. But I think it just sets things up. And not only that, with the acquisition, they get the CEO of Blade is going to come on to JOBY and remain a director on Blade. So it's just lots of synergies there. I think it's a good catalyst. And that's on the heels of the partnership last week with that other company in regards to the defense sector, right? What was the name of that? So it's just good news after good news. And I'm not like a good news person when it comes to stocks that don't have revenues, right? To me, it's like you want to see execution, and you just hope their earnings call on Wednesday, they alleviate concerns of holdups in regards to approvals and certifications, things like that. Their cash burn is in line, and then have the paint a good vision of what these new acquisitions and partnerships do for their addressable market. And then I could see a trade into the 20s. So in light of that, I think there's risk, right? So the risk would be that no positive updates or they can't spin things regards to the acquisition or the partnership in a meaningful way. And then maybe it's like a sell the news event. So that would be one outcome. And the other, if they can spin it in a positive fashion, I think it trades into the 20s. Risk reward there is a little tough there. So I'll just continue to hold my freebie October 20s. But what a great story. That one continues to go. And then, on the flip side here, Roku, just disappointing. I put it on the watch list this morning. It's like my Baidu, right? And I was saying it last week. It's like this, they keep posting beats and raises. So the company posted a beat and raise. They raised their guidance from a loss for the year to a $30 million profit and a $400 million stock buyback. And despite that, the stock just can't get out of the way of itself. And I think there's folks who just think that at some point Roku is just going to become, growth is just going to become either flat to negative, and it's going to be one of those stories that just disappears. I don't even know how to. It's similar. I just put it as like Baidu, right? And it's like today Baidu has news with Lyft, a partnership, and normally I'd be looking at Baidu and say, "Wow, this thing's going to go $95," and I would not be surprised to see it go green or red today. So I still, until I could figure it out, the market does not agree with my sentiment, and it doesn't make sense to just keep banging my head against the wall trying to make the market agree with my sentiment. So I'll just sit on the sidelines here with Roku until something changes. Still have those August strikes. I'm thankful I was able to lock some in after before the close Thursday. I'll have to stare at them a couple more weeks, but that comes with the territory. Speaking of which, TTD reports earnings at the end of the week. Another name, like I already played it nice with that addition to the S&P. I don't know if I'm going to trade it here until the end of the week. Another price target upgrade this morning. I think it trades north of $100, but am I that convicted? So I'll keep weighing it, but I might just wait and see. The way to trade is maybe to add some calls here today, lock some in before earnings. But I tried to do that with Roku. It didn't really. I mean, it played out right at the end of the day on Thursday, but I'll be patient there. Other names reporting, right? So Serve Robotics reports Thursday. Cardlytics reports Wednesday after the close, and TripAdvisor all report this week. So, of course, of the three, I mean, I love TripAdvisor. I'm just gonna hold my September strikes. I expect. I don't know if they're gonna make some commentary in regards to that uh, beneficial owner where activist stake. I I hope they do, and I don't know if they'll bring up their other two segments, but of course the Fork Aviator are the two big topics to watch in their earnings and their growth. So bullish there, but I'm not going to add anything big. It took it on the chin on Friday, I guess, with the rest of the small cap names. And then Serve actually wasn't down too much on Friday, all things considered. So just a great story. I mean, if you go into any metro area, like even in the city, it's so in New York City, you see like you don't see trucks, right? You see like people on little scooter carts with the Amazon carts and all that, and it's like all that stuff that you used to see is all transforming. I mean, you see people on bikes with little carts behind them with totes, and I don't know if that's the DoorDash. So all the way things are getting transported in the last mile are it's getting disrupted, right? And the disrupted is going to go from people with the bikes with the totes on the back to robots with the product inside or whatever, and it's just amazing to see the transformation, like the Amazon lockers in front of all the apartment buildings, the things that you never used to see back in the day. And I'm not saying that Serve Robotics is going to be a $100 billion company, but where it trades right now with its cash position, I could see it trading into the 20s. I don't know if that's going to happen after this earnings will take a huge beat and raise, but I mean they're getting close to rolling out the 2,000 robots for Uber. So I think it's a great story. All right, and not only that, it has a 25% short interest, so could set all it needs a little spark to set it off. So that's Serve. I don't think I'll add anything to earnings. Same with CDLX. I mean, disappointing. Gave back most of its meme craze run, but holding the 50-day. I like CDLX. I'm not going to go on a rant on that one. And then last but not least here, Amazon's cloud service business put pressure on MDB. And the funny thing with the pressure wasn't like Amazon's disappointing results on cloud was because of the demand issue. It's because of the supply issue. And you would think that would still be a net positive for MDB and Snow, but so all the way from the 250s in the middle of the week down closed. It was testing under 220 into the end of the day before closing 220. Could be another one of those lotto trades where I look for some spec calls. 235s maybe 240s. 235s look kind of expensive on a risk reward basis, so I'll be patient, but don't be surprised if I do some MDB lottos. And then, of course, if we do get some kind of reversal here at the open, the Broadcoms, the ServiceNows, I mean, I was talking about ServiceNow on the rant. I don't know if it was Tuesday afternoon or Wednesday, and the stock was like 970, 980, and the 935s were like $1. The 925s were like 25 cents. And then by Friday morning was 914. So doesn't take much for a little pressure to turn some of those premiums from 25 cents to $25, right? So crazy stuff. But it's the timing part of it, right? I mean, that could have happened. That might not have happened this week. Might have happened in 4 weeks, right? And you keep trying to trade it for downside. So the timing is always the tough part of it. Anyway, let's have a great day. I'll be back on audio later.